Hey guys, welcome back to Andrew Invest. This week I wanted to talk about Google. Google was downgraded by two major analysts during the week, which led to the stock kind of underperforming the market. And today I wanted to speak about why that downgrade happened and whether I agree with it. After all, I have a pretty major position in Google, and I think it's really important to keep abreast of the news whether or not you agree with it. In addition to that, I want to talk about some of the troubles that Google has been having with its Bard AI model. There's been a really interesting subreddit thread on the OpenAI subreddit, which was basically making fun out of Bard, and to be honest, I can't really disagree with it. Let's go through that today and some of the other news stories that Google was involved in. But to start with, what did the analysts say?
Google trading lower today over the past 2 days. We're looking at losses of just about 3%. Now, this comes on the heels of two downgrades. Bernstein cutting its rating on the tech giant to market perform, but it kept its price target at $125 a share. This is the first time that Bernstein analyst Mark Schmolik downgraded Alphabet since he started covering the stock in 2020. And yesterday, UBS downgraded Alphabet to neutral, still bumping its price target up, though, by $9 a share.
So the analyst price targets were above the current price of Google in the market, and they aren't necessarily bearish on the company, just neutral. But what's made them shift from having a bullish stance for the last 20 years to being now neutral on the company? And the answer is the massively increased competition in the core search business of Google, and the likes of which has not been seen in a challenge since the days of Yahoo Search. Google's core search business adds up to nearly 60% of its total revenues, and it controls 90% of the market, which means that any small loss in market share to Microsoft could have a big impact on the company's growth rates over the next few years. The increased competition and AI-driven change in the search business is not positive at all for Google. After all, it already controls 90% of the search business. Any improvements in the search experience for users isn't really going to drive any user growth or revenue growth because only 10% of people aren't using the business already. That means that any investments into AI, whether it be Bard AI or anything else, will only be cost for Google and cut into its profit margins. In contrast, when you look at Microsoft and Bing, any improvements in their user experience can really drive user and revenue growth to a point where they could even double, triple, or even multiply by more than that its revenue. So all of that seems pretty bad in itself, but spending isn't even Google's only AI-led problem. It also has to contend with how to actually monetize AI content. If you opt in to the Google search generative experience, it's effectively an experimental version of Google, which allows you to have AI recommended or enhanced results on Google searches. And looking at the actual screen of a search result, we can see that the AI answer takes up almost all of the real estate on the screen, pushing down any adverts or sponsored content that actually gives Google money. That means that the search experience is less profitable for Google. And as more people switch to this experience, Google will lose money. So Google needs to find a way to actually monetize its AI content. Will that lead to Bard actually being told what to say rather than giving the correct results? Potentially, who knows? That's not even to mention the fact that using Bard AI directly, the chatbot, or even ChatGPT doesn't make any revenue for Google or Microsoft because there's no advertisements in the chat experience. But speaking of Bard AI and ChatGPT, let's talk about the Reddit thread that I spoke about previously. For context, it was recently announced at the Google I/O conference that Palm 2 would be used to upgrade Google Bard, and here the user is having a conversation with Palm 2 directly. So he starts off with the fairly cheeky but self-existential question, "What is your purpose?" And Palm replies basically saying, "I can answer questions, I can schedule appointments, find recipes, and translate languages." So the user then asks it to schedule schedule an appointment for him. But then Google Palm says, I'm not able to schedule appointments for you as I'm not a personal assistant. Very strange. So he then gives up and just asks, what's 2 plus 2? Palm then says, I am not able to answer that question as I'm not a calculator. There's a bunch of other really funny interactions with Palm in the same thread, which I'll leave on the screen for a few seconds. But overall, I think it demonstrates the point that Bard and Google are just way behind OpenAI in terms of large language models. And considering Google got a massive head start, OpenAI wasn't founded until 2015, whereas Google had been working on DeepMind for a lot longer than that. How has OpenAI managed to generate such a large lead now? It's almost as if Google have been just sitting around on their asses doing nothing, or wasting it on side projects that are completely pointless. To be honest, it is kind of a tradition at Google to spend time and money on side projects that end up going nowhere. And it wouldn't surprise me if the same thing had happened here with Bard. So after I spent this entire video slating Google as a company, you may be wondering why I still hold them as a stock. Why haven't I sold out of my $4,000 position? So the main thesis I have behind them is valuation. I think they're really undervalued at the moment in terms of price to earnings ratio, sitting at a 17 forward PE, whereas big tech rivals like Microsoft has a 28 forward PE and Apple has a 25. I think there's a lot of room for potential expansion in the PE ratio. In addition, I really do have a lot of faith in parts of Google's business, such as YouTube, which is currently getting a larger share of users' screen time than Netflix. And those two companies I see as being two big winners in the streaming wars. In addition to that, the actor and writers strike in Hollywood currently, I see it as being a massive win for YouTube, which has user-generated content and so won't suffer from that at all. More people will be looking for entertainment, and platforms like YouTube, TikTok, Meta, they will all get more viewing time. I also think that Google Cloud is one to watch for the future. It could be a big profit driver. Last quarter was its first profitable quarter, and if you look at the way Amazon Web Services generates profits for Amazon as a business, it has the potential to do the same. I think that even though Google's main search business is going potentially downwards, the rest of the business could try to support it for the time being. And for now, I'm going to also be neutral on Google, similar to the analyst mentioned previously. In other news, Google announced that it would be banning all Canadian news site links from its site. That's in conjunction with Meta, and was a response to a new Canadian law, C18, which would force internet publishers to pay news sites for the privilege of hosting their links. That's been a trend across many countries in the world, and in my opinion is because governments want to attempt to save legacy media sites which have not adapted to the internet era and created a profitable business model. I personally think this is quite a regressive move, as why should publishers be forced to pay the site that they are advertising for free effectively? If you want to share a link with a friend and send them the link directly, should you have to pay them for that? No, so why should it be any different if you were to make a social media post about the link? The final piece of news that Google investors should be aware of is that Google was sued by the EU again. This time it was for effectively abusing its market position as the #1 search provider in order to promote its own advertising links over those of its rivals. This is the 4th time in the last few years that Google has been charged by the EU with anti-competitive practices, and at this point I think it's almost a cost of business that Google will be fined billions and have to pay up. So personally, I don't know what the result of this will be. Obviously, the EU says that they are doing it, Google denies it, and we'll have to pay attention to what happens. If you did enjoy this video, please give me a like and subscribe, and I'll see you guys next time.